Never run out of battery again with the INIU portable charger, the slimmest 10,000 milliamp hour power bank that keeps your devices charged on the go. Stay powered up wherever you go. Click the link in the video description to shop now on Amazon.
We're seeing some concerning trends in the tech world, folks, and today we're breaking down why Qualcomm stock took a hit despite beating Wall Street's expectations. Qualcomm just dropped its Q2 earnings, and let me tell you, it was a mixed bag. The company crushed revenue projections with $10.9 billion in sales, up 17% from last year. But when you scratch beneath the surface, things get interesting. Qualcomm's silicon slinging QCT unit is doing fantastically well, raking in $9.5 billion and propelling the company to victory. But what really caught investors' attention was the mobile handset segment, which saw a 12% boost to $6.93 billion. And then there's the automotive chips business, surging 59% to $959 million. Now, you might be thinking, okay, Qualcomm's on fire. But hold on, because there's another side to this story. The Internet of Things division is doing all right, but the licensing arm, or QTL unit, is flatlining at $1.32 billion. That's a big red flag, folks. And when you consider that licensing revenue makes up a huge chunk of Qualcomm's overall income, it's clear something's amiss. Now, let's talk about what's really worrying Qualcomm's investors. The company's forecasting Q3 revenue to be between $9.9 billion and $10.7 billion, with the midpoint at $10.3 billion. That might sound like a lot of money, but it's actually 4% lower than Wall Street's expectations. So what's behind this slowdown? Qualcomm's chief financial officer is pointing fingers at macroeconomic agro and trade chaos. You see, China's a huge part of their supply chain, making up around 66% of revenue. And with all the tariff threats flying around, it's no wonder investors are getting nervous. But wait, there's another storm brewing on the horizon, Apple. That's right, the fruity cargo cult is still buying Qualcomm modems, but they're planning to ditch them by 2027. And let me tell you, that means a chunk of cash is going to disappear for Qualcomm. Qualcomm's CFO just said that their share of the Apple product business will go lower in future launches. That's a pretty ominous warning sign, folks. It suggests that Qualcomm's once golden licensing scheme might be losing its shine, and it could be due to sagging demand or regulatory barbs. So, what does this all mean for Qualcomm investors? Well, let me tell you, it's clear that they're getting jittery about the company's reliance on Apple. And with that pie slice disappearing in 2027, there's a lot of uncertainty ahead.